Hey everyone, I'm pretty excited to do this video today on what's going on with one of the more exciting stocks in the market today, C3AI. So in this video, I'm going to do a brief overview of C3AI stock, trying to dig into really what's going on. So let's get right into it. So in the fourth quarter, the company generated revenue of 72.4 million, but more importantly, they generated 27.1 in operating cash flow and 16.3 million in free cash flow in the quarter. This is a big deal for C3AI because the company is usually negative in terms of profitability, cash flow from operations, and free cash flow. So the fact that they were positive this quarter was solid, and it gave management confidence, which I think we're going to see a little bit later in the video, to say that, we're approaching the point where we're going to be a self-sustaining business. We're going to be cash flow positive pretty regularly. So I think we'll get into that a little bit later. So the operating margin was negative 32.5% in Q4. For the full year in fiscal 2023, they generated 266.8 million, a very mediocre 5.6% growth rate from the previous year. I say mediocre because when I see companies with massive losses on the bottom line like C3AI, I expect to see very high growth rates. Because if you're losing money on the bottom line, I suspect that you're investing in growth, and I want to see that growth reflected in your revenue, which I didn't see for C3AI. Now, that could be for a couple of reasons. One, because the company is switching to a consumption-based model from a previous subscription-based model, so that could be causing some headwinds, but I don't know. I'm a little bit skeptical of the company that's losing so much money on the bottom line and not generating better revenue growth. So the company reported GAAP RPO, which is remaining performance obligations, of 381.4 million, which was down 20% from last year. But like I mentioned, that was expected because of the transition to a consumption-based pricing. So companies, their clients are not locking in long-term contracts, which goes into its remaining performance obligations. Instead, they're just hiring C3AI and paying for consumption as they go. So they pay as they go instead of locking in these long-term contracts in that goes into its RPO. So the company finished the third quarter under the transition of the consumption-based pricing model. So they're only 3 quarters in this model, and they expect the second half of its fiscal year 2024 to have a higher growth rate on a sequential basis than the first half. So they're going to start to see an acceleration in revenue growth in about 2 quarters, right? So not the first quarter, not the second quarter, but starting in the third and fourth quarter of its fiscal year 2024, management is expecting a rebound in revenue growth. Now that is likely due to two reasons. Number one being that they get further along in the consumption-based model. And the second one is because they launched that artificial intelligence product in its most recent quarter, which I did a video on, which I will link to at the end of this one, that has its clients excited and it's getting more deals done because of that product. So those two factors are leading management to be more optimistic about the third and fourth quarter. And most importantly, they expect to have positive cash flow starting the fourth quarter of 2024 on a consistent basis. That's the big announcement. It's not like they're going to be they're going to be cash flow positive 1 quarter and then negative and then positive. No, they think that starting in the fourth quarter of fiscal year 2024, they're going to be consistently cash flow positive. And that will be a big deal for the stock price if they actually achieve this target. All right, so that's all I've got for this video on C3AI stock and what's going on. I hope you've enjoyed it. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.